Have you noticed that everything around you has gone up significantly in price over the last 2 years? Groceries, petrol, housing, used cars, and just about everything that we need to maintain our quality of life have increased in price. Have you also heard the governments and the central banks around the world tell you that this high level of inflation that we're currently experiencing is only transitory or temporary? We are currently experiencing a major property boom, and we haven't seen anything like this for a very long period of time. But do you understand why this is happening? Understanding why something is happening goes a very long way in helping us make better financial decisions and better investment decisions. And it will give us a better understanding of what we should expect going forward. In today's video, we are going to talk about why I am extremely bullish on property over the next few years, and why I don't only see property investing as a way to make money, but also as a way to protect my purchasing power from this high level inflation that we're about to witness. Hey guys, welcome back to the channel. My name is Zeng and I make weekly videos on the topics of personal finance, property and real estate investing. So if that's something you're interested in, make sure to subscribe to the channel for more awesome content. And as always, I am not a financial advisor and this is not financial advice. I am simply sharing with you guys my personal opinions and strategies. And I will always recommend you to do your own research and due diligence before jumping into any financial decisions. And without further ado, let's get straight into the video. This is an issue that has been getting worse and worse over the last few decades. And it has now got to a point where it requires the income of 2 full-time workers just to service the mortgage. This is extremely sad for the families and first-home buyers trying to get a start in the property market and working so hard every single day towards their goal, but they are now falling further and further behind because of the recent boom that we have seen in our property markets. So who is to blame for this? Is it the investors who are speculating on the markets, or is it the foreign buyers who are buying Australian property without even looking at it? But what if I told you it is none of those, and all the issues that we are seeing around our housing market and affordability can be summed up in a single word: inflation. Or in other words, the rapid decrease in our purchasing power as the central banks and the governments around the world print more and more money and add it to the money supply. The modern economy relies very heavily on debt. And if the central banks and the governments around the world stop issuing out debt and stop printing money, then the financial system, the entire monetary system, will collapse. This is why all the developed nations, Australia included, have an inflationary target of 2 to 3%. And the developing nations have a target much higher than that. Inflation in its most simple form will lead to asset price appreciation. This is why we have seen the stock market, the real estate market and the cryptocurrency market all grow in such a dramatic fashion over the last few years. However, it doesn't stop there. Inflation also increases the prices of everything else, such as groceries, food, cars, education, medical care, and just about everything else that we spend our money on. For example, if we look at this graph here provided by Fidelity International, the cost of everything has gone up significantly since 2000. Even though the cost of housing has increased by 94%, the cost of education, medical care, insurance, and childcare have all increased by significantly more. And the only thing that has become cheaper were items improved by technological advances. When we look at house prices now compared to what they were 20 years ago, sure, it definitely seems like house prices have increased significantly and they are still growing at a rapid rate. But we need to understand that this is because of inflation and the minimum wage growth that we have seen across pretty much the entire world. So if you're looking for someone to blame the governments around the world for printing money. Blame your employer for not paying you enough, and blame the Australian government for keeping the CPI artificially low. Look, the world that we live in and the monetary system that we have is far from perfect. But if we take the time to educate ourselves and understand how these monetary systems work, we can use that information to benefit ourselves or protect us from losing our purchasing power. The thing that most people don't understand is that working hard, saving money, and then putting it in the bank worked extremely well for our parents and our grandparents. But we are in a very different world now. And in the current world, savers get absolutely punished. The 1% interest the banks are paying you on your deposit does not even keep up with inflation. And I don't care what the government is telling you. inflation is much higher than 2 to 3% right now. Just think about what happened back in 2008 when the global financial crisis happened. The Federal Reserve printed more than $800 billion to bail out the banks, and that was enough to save the entire financial system. Fast forward to now, the Federal Reserve is now printing trillions of dollars every few months just to keep the financial system from collapsing. With so much money being added to the financial system, how is it possible for inflation to be 2 to 3%? Sure, the US and Australia are two separate countries and two separate economies. But with so much money being printed in the US, some of that cheap credit is going to flow over to Australia. If we look at this graph provided by the Australian Trade and Investment Commission, we can see the steady rise in foreign investment into Australia. This has risen significantly from just under $1 trillion in 2000 to $4 trillion in 2020. And if we look at which countries are investing into Australia, we can clearly see that a lot of the money is coming from the US. Combined with our political ties, I personally think it is fair to say what happens in the US has a dramatic effect in Australia. Going back to the topic of inflation, I personally think the inflation, the real inflation, is much higher than what the CPI is telling us. And we need to understand that if we are serious about protecting our purchasing power over the coming decades. If you have been watching the news or reading news articles lately, then you would most likely have heard that the inflation we are seeing right now is only transitory or temporary. But I do not agree with that, and here is why. Even though the Australian government and the Reserve Bank of Australia have eased off on their money printing, the US is now leaving their money printer on autopilot. If we take a look at what's happening in the repo market, then we will understand why I personally think inflation is going to be a very big issue and very high in the coming years. For those who do not understand the repo market or how it works, it is perhaps one of the most important parts of the financial system, and any issues in the repo market will lead to issues in the entire monetary system. The repo market used to be a free market that allowed the financial institutions to borrow and lend money to each other, usually on a short-term, nightly basis. The demand and supply of the credit dictates the interest on the loans. For example, if there were more banks looking to borrow money than banks willing to lend out money, then the interest rate will go up. And if there were more banks trying to lend out money than banks willing to borrow, then the interest rate will decrease. It is a very simple supply and demand equation. However, what we saw in September 2019 was that the banks and financial institutions were unwilling to lend out money. And this caused a massive liquidity issue, and the interest rate spiked to more than 10%. And of course, the Federal Reserve stepped in and pumped the entire market full of liquidity so that everybody had money to borrow, and they have been doing that ever since. But what the Fed is doing now, and what we are going to talk about next, is, in my personal opinion, going to lead to a lot of inflation. The Standing Repo Facility. This is now a permanent facility offered to the banks and financial institutions so that the events of 2019 will never happen again. The Fed is pretty much saying, hey, instead of borrowing money from each other and have all this uncertainty about what rates you're going to be able to get, why don't you just borrow money from us? And we are going to guarantee you a rate that is much lower than what the other banks are providing. And get this, the limits that the Fed is offering to these US institutions is $500 billion and $60 billion for foreign institutions. I know this sounds very confusing, and we don't need to understand how this works. All we need to understand is that giving the banks and financial institutions all of this cheap credit is going to lead to inflation. Because the banks and financial institutions are greedy, they're now going to take advantage of that facility and use that cheap credit to make money. And in my personal opinion, I think that is going to lead to a lot of inflation and much higher asset prices. Now, this is going to have a noticeable effect on the Australian property markets, but not a huge effect. Nothing as crazy as what we have seen in the US. But what will have a huge effect on our housing market is what happens when our borders are finally open. Australia was already one of the most desirable countries to migrate to before COVID even happened. And based on how well our government managed the situation, I think it only makes Australia even more desirable. The US is still getting around 100,000 cases every single day, and they are not even in lockdown anymore. It feels like they have just given up. This combined with all the social unrest, the wealth gap between the rich and the poor and the rising tension between the US and China has made the US a much less desirable place to migrate to. Look, this is only my personal opinion and feel free to disagree with me, but I personally think all the wealthy migrants in the US and around the world look to Australia as a safe and stable country to migrate to. Therefore, they are going to want to migrate to Australia when our borders are finally open. And that is going to lead to a lot of extra demand for housing in Australia. And with how bad our housing shortage is already, that is going to make things even worse and pour more fuel on the property boom. The Australian government also wants a quick recovery from our extensive lockdowns. And what is the best way to do that? With more foreign investment, a larger population that pays more taxes, and more workers to address the worker shortage that we have in some of our industries. Look, I am not an expert, but I personally believe when our borders finally open, we are going to see a lot of immigration. And that is going to put a lot of extra pressures on the housing market and drive up house prices. Alright guys, this brings us to the end of the video. I want to thank you for watching it till the very end. I hope you learned something new. If you did, please do me a huge favor by hitting that like button right there and subscribing to the channel for more content just like this. And before I let you go, I want to get some feedback from you guys. Let me know what you think about the video and do you agree with everything I've said. I've also left my contact details down below for if you want to get in touch with me. I hope you guys stay safe and productive out there, and I'll see all of you guys in the next video.